What's going on, traders? We're going to get straight into it. So, the week is finally here where we could be looking at the announcement of rate cuts. And the market is at a very interesting spot here. And what I mean by that is we're at very, very critical levels: supply and demand zone, resistance, fair value gaps, you name it, we are there. So, right now, we are looking at the triple Q's daily time frame. And as you guys can see, we're at a very critical trend here where we've continued to reject this trend over and over throughout the year. We rejected here, we rejected here, and now we are back at this trend. And we have not yet rejected. We're pretty much just sitting at it. And I guess the market is pretty much waiting on some type of decision to make. So, could we be looking at a sell off heading into the rate cut news on September 18th, where we pretty much reject from this point here and start to mitigate this fair value gap that we left open, which shouldn't be a surprise because we've been pretty much running like crazy last week. So it isn't hard to imagine that we left a lot of fair value gaps open. So could we look at a rejection here and mitigate this fair value gap all the way up to 460 range before we start breaking out of this area and start heading towards this fair value gap all the way into 490s on the triple Qs? It's also important to note that we have a gap at around 492. We have an actual gap that's left open at around 492. So if we were to so happen to sell off into this news, maybe starting tomorrow or Tuesday, is this the move that we're looking at where we break down and then we get the news on September 18th, and then the market starts to bounce higher and start heading towards this next fair value gap? Now the next question is, are we looking at all-time highs? And I think it's possible. I do think we're going to see all-time highs this year. I don't know if rate cuts is going to be the cause of that. You guys know that my all-time high target is 510. I've been calling for 510 even before the triple Qs hit 503. So I was about $7 off, but still, I still think 510 is on the table in regards to all-time high. It's just a matter of when. I also think we're going to see a huge sell-off. Don't get it twisted. I still think that's on the table here. So that is the bullish scenario that I am looking at on the triple Qs. Now let's look at the weekly time frame. So on a weekly time frame, we still have this potential head and shoulders pattern. The reason why I say potential is because it's not yet confirmed, and we still have this neckline intact right here, where you guys are seeing these marks here and this blue neckline right here. So if we just so happen to break below this blue neckline at around, I'll say 420, between 420s, 430s, it really depends on where we start to reject from up here around this range and start heading down here. If we break below this trend, then this head and shoulders pattern would definitely be in play. We have a shoulder here, head here, and another shoulder here. And if you don't believe this is a head and shoulders, I encourage you to watch my head and shoulders videos on how to identify head and shoulders, or go to schwab.com and actually look up the definition of head and shoulders. But regardless, it's very interesting on where we are at in regards to the triple Qs. We broke above this one trend right here, but now we're pretty much stuck in between a rock and a hard place. And so, could we break much higher from here? Is that possible? It's actually very possible. But right now, given where we are, we could be looking at a move like this where we pretty much reject. And we don't have to reject right away. Maybe we just start to head higher. Maybe bulls get trapped up here, and then we just give it all back towards the end of the week or when rate cut news comes in, whatever the case may be, and then we start to head lower. So that is the bearish scenario that I am looking at. Now, let's look at the SPY. Now, the SPY is in a very interesting spot here. Let's get rid of this real quick and then we'll get back into it. And so we're looking at the SPY daily time frame here. And as you guys can see, we're looking at an ascending triangle, which is a bullish pattern. You have your low here, you have your higher low here, and then you have a flat top. Now, another argument that a lot of traders may have is that we could have a triple top here. I'm not going to deny that this is a possible triple top. I just don't think it's quite there yet. If we get a rejection from here, then maybe we could be looking at a triple top. But I like my tops and bottoms. Pause. I like to see my triple tops and triple bottoms, double tops, double bottoms, whatever the case may be. I like to have see them have a clear neckline, and I like to see them have a flat neckline. I'm not a fan of trending necklines, okay, in regards to the triple tops, double bottoms. But you do what you want. You trade patterns how you want, as long as they are confirmed. And so we could argue that there is a triple top here, which is a bearish pattern, or a triple top forming at least, because we haven't had our rejection here yet. But what's really interesting about this whole area here is that we left, again, just like the triple Qs, we left fair value gaps open. We left a fair value gap open at around 555, 556, and then we left another one open at around 550, 548. And so if we're just focusing on the ascending triangle, could we be looking at a move? And again, if we're looking at a sell off starting at the beginning of the week, given where we are, could we look at a sell off and possibly start mitigating these fair value gaps, bounce off the bottom of this ascending triangle, create another higher low, and then we start to head higher? Okay, we start to really head higher. We break out, we get our rate cut news, and then we break out and start heading to all-time highs. Now, you guys know my all-time high target is 580. Six highest I'm looking at is 600 on the SPY. Again, will rate cuts cause that? Can't say for sure, but I do think that's going to happen sometime this year. Now, another scenario we could be looking at where we're looking at a bearish scenario here, and I encourage you guys to really mark this ascending triangle on your charts, is that we break down completely. We don't even have to like break down exactly like this, but let's say we do break down, maybe we do something like this, we break down and we start heading towards this fair value gap all the way at the 530s, 535 range and start to mitigate this one as well. If we do just so happen to do that, then this whole ascending triangle will be out of play. And I do think that we are looking at somewhat of a bear market, especially if this happens based on the rate cut news. Okay. So if the day after rate cut news we start to really break down and start heading towards this fair value gap, then I think we're going to start really start mitigating a lot of fair value gaps to the downside across the market because we do have a lot open. Now, let's look at the weekly time frame. So again, it's the same thing in regards to the weekly time frame where we are at a very critical area and we could say that there's an ascending triangle here as well. I mean, you have a low here, higher low here, and another flat top. So it's clear as day where we are. Let's actually get rid of these arrows because they're kind of distracting at this point. But what's important to note is that we left a lot of fair value gaps to the downside open on the SPY. So if that scenario that we just talked about on the daily time frame does happen where we break below the ascending triangle or invalidate it and we start mitigating fair value gaps to the downside, I imagine we're going to start heading down here. Now, this is a crash scenario, I would say, if we just really start to break down and head down here. But what I will say if is that fair value gaps are way more likely to be mitigated than actual gaps. Okay, so you do what you want with that information, but that's what I think is going to happen if we are looking at a bearish scenario. Let's look at the NQ. And so the NQ is, again, just like the triple Qs, we're at a very critical area. As you guys can see here, we're at a trend line. We're at our trend line where we bounced here, we broke down, bull stepped back in, we tested the neckline, or we created the neckline at this point. So that's this blue line here. Hopefully you guys can see this. That's this blue line right here where we pretty much bounced off of it really hard. And then we broke back in. Bulls tried to keep us up. Bear stepped in, and now bulls are trying to push us back up again. And now we are back at that trend line all over again. So again, I don't necessarily think that we are going to see all-time highs heading into rate cuts. I do think that rate cuts will be the influence for that if it was to happen. I can't say for sure what's going to happen. Sorry, I don't have a crystal ball as much as I try to, but I just don't have a crystal ball. But what I will say is that it looks more likely that we're going to see at least some type of sell-off heading into the news, just given where we are. Now, if we just continue to break higher, which is possible, like we just constantly go higher and higher, even on Monday and Tuesday, then I would be very concerned here. But let's talk about what we're looking at. So we're looking at a head and shoulders pattern here. We have a shoulder here, head here, another shoulder here, and then our neckline is down here at around 17,500. But another scenario, and so this will be a bearish pattern, right? But another thing that we are looking at, where is it? Where we can have a double bottom forming here. Okay, so remember, I gave you guys a bullish scenario on SPY. I gave you a bullish scenario on Qs, I think. And right now, we are looking at a potential double bottom. So it's all a matter of who's going to win in this scenario. We have our neckline all the way in the 20,000s. We'll say 20,200 just to be safe. If we break above this neckline, then I do imagine we're going to start heading towards this area right here where these guys are. And if we really, really start to want to break, well, start to break out of this area, then we're looking at around 21K. Okay, right around the supply and demand zone. All right. Now we could reject from here. We absolutely could, where we just continue to just break down completely. Okay, we just break down. We get the rate cut news. We get some initial bounce, and then we break down even further. Okay, so that is on the table. Okay, we could just start off the week very bad. Maybe do one of these moves. Maybe tease it a little bit. We break down right here, we visit this area up here at around 19,800, and then we reject, and then we start to head towards our neckline on the head and shoulders pattern. All right, so it's all a matter of who's going to win this week. We have a double potential double bottom here. We have a potential head and shoulders pattern here. The reason why I say potential is because neither of the necklines are broken, therefore they are still in play. Okay, so nothing is yet confirmed. We go down to the daily time frame, we get a much better view. We have a low here, a higher low here, and then another thing we have is a fair value gap open. Okay, so we have a fair value gap open to the downside, which leads me to believe that we could be looking at some downside starting the week off. Okay, we've seen it on the triple Qs, we've seen it on the SPY, now we're looking at it on the NQ, which is essentially the same thing as the triple Qs, where we pretty much break down starting off the week and start heading towards 19,000, 18,900, and then potentially start to bounce from there and maybe form some type of higher low right here in this area here, and then we start to break higher. Okay, so those are the potential moves that I am looking at in regards to upside and downside. All right, so I do imagine that if there was an opportunity to mitigate fair value gaps, this week would be the absolute week to do so, whether it's to the upside or to the downside. Yes, so I told you guys in my last video that, well, last two videos, that if ES breaks above 55.50, then that is absolutely bullish. And right now it's above 5,600. So I would say that we need to break above 5630 for us to really go higher. Okay. Not, I wouldn't say too much higher, but at least 5,700. Right. And as you guys can see, we're on a daily time frame. Again, very, very critical area. I mean, we're pretty much looking at the same thing we just saw on the SPY, right? Where we bounced off this trend here, we bounced here, we bounced here, we bounced here, we broke down. Well, we actually consolidated here. We uh, either one. Okay, we bounced or consolidated. We consolidated, then we broke down, and then we broke back above. We tried to break higher again, and then we failed, and now we look like we are trying to do it all over again. And as you guys can see, we are at very, very key resistance. We're at a weekly supply and demand zone. We really need to break out of this area at around 57.10, 57.20 just to be safe. Okay, but again, like we just saw on the triple Qs and the SPY, we have a fair value gap to the downside that needs to be mitigated. Okay, where we can either reject, we can start rejecting from here. We start mitigating this fair value gap all the way at 5,500, and then potentially start to head higher. Let's look at the oops. Let's look at the weekly time frame here. And so the weekly time frame, we left a huge fair value gap open. Okay, so that leads me to believe that we could look at one more sell off if we were to start heading towards all time highs. I do imagine one more sell off is on the table. If it's not one more sell off or dip, then it could just be an absolute correction or crash, one or the other. If the Fed does not announce a rate cut and they just change their mind, I do imagine the market is going to crash at that point, because that's pretty much what we've been pricing in all year. We've been pricing in multiple rate cuts. And for us to finally get here and not get it, I don't think the market is going to react well at all to that news. Okay. But I don't think that's going to happen. I do think we're going to get rate cuts. But if it does happen, be fully prepared for the market to like really, really tank. Okay. That's very bad. Okay. So one thing I want to do is go back in time. And so we're on a weekly time frame on the SPY here, and we look at 2020. Okay, so 2020, and we can also look at 2007. All right, so right here was pretty much when the market pretty much crashed, and then Jerome Powell announced a rate cut. Okay, Jerome Powell announced a rate cut, and then we started to, as you guys can see, we went absolutely ballistic. Okay, but the exact opposite is happening right now. Well, where we are pretty much pricing in the rate cuts already. Now, keep in mind, right here was when Jerome Powell announced an emergency rate cut. So we're looking at a different scenario here where the market was not expecting a rate cut, but Jerome Powell announced an emergency rate cut, and then the Fed started printing for the market. And that pretty much just boosted the market higher and higher. And now we break down, well, here we break down at around what was this 2021 we 2022 we started to break down all over again, and then we started to go higher, started to price in more rate cuts at this point, or price in rate cuts, and then the whole AI news started to come out. We actually did I think we priced in AI before we started pricing in rate cuts. I think the whole Nvidia thing pretty much took over the market, and that's pretty much what the market was really caring about. But you can say both was happening simultaneously. But again, so we announced an emergency rate cut here. We started to break higher, right? And now we're already pricing in rate cuts. So two different scenarios. Okay. So my point being here is if we're pricing in rate cuts already, because we're not talking about emergency rate cuts, we're talking about already pricing this information in. Are we looking at a sell the news type of deal here? Okay. I don't know. I mean, look what happened. Emergency rate cut. We went crazy for weeks. Rate cuts already being announced. We went crazy for weeks. I don't know. Okay, so are we already pricing in this news? Okay, now let's go to. So I want to erase everything. Okay, let's erase everything. Now everyone's talking about 2007, which I don't think is a good idea. Okay, but we're going to talk about 2007 because someone just in the YouTube comments is always spamming about 2007, and he says it every single video. So we're gonna talk about it. Okay. So one, we're talking about two different times here. You're talking about something that happened. You're talking about something that happened 17 years ago. Okay. You're comparing two different times here. We're talking about an election year versus a non-election year. You're talking about so many things that could play out, or two different like pretty much dimensions at this point, right? Two different times. But if we're looking at 2007 and what happened in 2007, so right here, we pretty much revisit previous highs, maybe even broke a little bit higher. But then look what happened after the rate cuts were pretty much announced. And in October, we pretty much dropped. Okay, mid-October, we pretty much dropped, right? And so the expectations is that the same thing is going to happen this year, where mid-October we're going to see the market pretty much tank or correct, whatever you want to call it, right? And I'm not totally against that. Of course, I'm not against that. I mean, I don't care where the market goes. It can go higher, it can go lower, as long as I make money and as long as our Discord makes money, right? But again, we're talking about two scenarios. And if the overall market, not even the overall market, but if a bunch of traders are talking about the same thing and they're posting it all over Twitter, they're posting it all over YouTube or whatever the case may be, and they're just like, oh, this is exactly going to happen like 2007 and blah, 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 then I imagine market makers are going to do the opposite of what everybody is saying. That's normally how it goes, where everybody's just pretty much yelling out their ideas and things like that, then that's typically how it goes. But given where this is, so again, we're looking at the weekly time frame for 2007, and so I want you guys to etch this in your memory real quick. Just really screenshot it, do whatever you need. Okay, look what happened right here. Where is it? Okay, here we go. So look what happened right here, right here. So we'll just say this is a top. So we topped here, broke down. We topped here again, broke down, made a lower high, broke down again. Keep this in your memory, right? And so if we're saying the same thing is going to happen exactly the same way, or the same pattern is going to happen, if we're to assume that 2007 is going to, well, 2024 is going to play out the same way in 2007, we're already at this area right here. Right here, we're already here. We go all the way back, or all the way forward, really. So we go all the way forward, and look where we are. We are in the same area. We're forming the same pattern here. Boom. I don't know. I don't know. Okay. So, I mean, I'm not saying it's not going to play out or anything like that. It could. Maybe we do start to crash in October or whatever the case may be. October is notoriously bearish. September is notoriously bearish, right? But if we're comparing 2007 to today, and we're looking at the same exact scenario, right? It looks like we're at the exact same spot that we currently are in 2024, where we broke down, we retested, and then we failed. We got a little bit above it. We revisit this wick, right? We broke down, we revisited, we hit resistance, and then we started to break down all over again. Now look where we are. We're doing the exact same thing. The exact same thing. Okay? We're we hit resistance, right? We formed resistance actually. We broke down, and now we revisit it all over again. So something to keep in mind here. I'm not saying we are going to like crash from here or whatever the case may be. We could absolutely break higher. But if that is the case, right? If we do break higher, and let's say 2007 is going to play out exactly the same way, or 2024 is going to play out the exact same way as 2007, then I would imagine if we are going to see all-time highs, we may not have much all-time highs left in regards to the SPY, where we do one of these, and if we're talking about 2007, right? We bull trap, we wick, we break down. So that's my thoughts on it. You could do what you want with the information by all means. I'm not against either side. I would love for the market to absolutely just correct, crash, whatever you want to call it, because that's beautiful buying opportunities, in my opinion. If we do just so happen to go higher, then we'll just adjust. Okay, like I tell Discord members, we'll just adjust. Okay, so that's all I have for this video. Hopefully you guys got something out of the video. Like, subscribe, comment. Discord link is in the description below if you want to see how we're going to play out this week, how I'm going to trade this week, all that fun stuff. Um, I'm really happy that everyone is really enjoying the Discord, or at least enjoying the bots. Maybe they're not enjoying me myself, but maybe they're enjoying the AI bots in the Discord that's calling out trades. And of course, I call trades out myself, probably more than the bots, but it's a competition, whatever the case may be. And so I really appreciate everybody that's joining. I appreciate all the support on the YouTube channel, both negative and positive. We have been growing insane. It feels like just a month ago I was at like 500 subscribers, so it's insane. Okay, so appreciate the support, guys. If you have any thoughts on rate cuts, what's going to happen this week, feel free to comment below. Just try to keep it respectful. All right. Other than that, that's all I have. Till next video, traders. Have a good one.